The biggest earnings season of 2023 is upon us, and it's kicked off with some of the big banks showing us that they mean business when it comes to returns. High interest rates has led to higher profits, but S&P 500 still snapped the 4-day win streak. Could this be a buy the rumor, sell the fact style market? The charts are starting to suggest so, and more importantly, we also saw some dark pool activity near the close of the day. We've got that and more coming your way in today's video as we go through stocks, commodities, and cryptos together. Well, welcome back everybody to the Daily Show where we talk about markets around the world. This is our special weekend edition where we cover the macro, hottest charts, and of course, lead indicators together. If it's your first time here, welcome to the community. Subscribe, smash that like button. I'm sure you're going to find a lot of value in today's video. We've got some big volume coming your way. So let's discuss the week in review. Semiconductors were the standouts, and also banks did pretty well in what could have been a buy the rumor, sell the fact style event. We'll be finding out very soon whether that's the truth of this earnings season. We also bring back an old favorite here on the charts. A few people have been asking, where's smart money, dumb money, confidence spread? Well, as we know, it got so disconnected a while ago when we broke out that we kind of stopped following it as much. But I wanted to show it because everyone's been asking, and you can see here the difference. Dumb money supposedly is buying out of control, and smart money could be potentially selling in. So we're looking for the signs of big volume transactions at these potential highs as we hit 45.30, well, pretty much on the Friday. Here's the risk model for the 15-day that a few people look at over on Twitter. And this, of course, can show us that we've got resistance coming in. Certain risk models are starting to show us that we're at the top end of some technical reasons. There's also this great Hussman thing here from John P. Hussman on Twitter, if you're interested in following him. And he goes through basically the equity risk premium, which we've been discussing for a while now. And he's stating that in his models, it's one of the worst reads on record. And the other times that we got this were March of 2000 and August of 1929. Now, do I read too much into it? No, they're not a timing tool, but it is interesting to see ERP getting so bad in this market when you adjust for so many different variables. Now, I haven't updated this chart, but you can see we're pretty much right here at this stage. So we're 2 days on, and you can see that during basically any of these pre-election years, the market's been following a very similar chart. It pulled back when it was meant to pull back. It went sideways when it was meant to go sideways. And now we approach the tipping point. Will we get there? Well, it all starts with, of course, the earnings. And the earnings season and the forward guidance will be so important moving forward. So far, so good, but the markets may have sold into those good numbers. And that's something that I think is always interesting. We also got a dark pool read here on the S&P 500, the SPY on the Friday. Is that a big thing? Well, you can see here that overall it depends on the price action next. When we had a sideways accumulation that broke out, it was a good thing. If we see a sell-off though, no, that will tell you that this was a larger trade and it probably instigates what we call a swing-based system. So, of course, that's going to be pretty important to note. And we'll be following over that over the next week to see the price action that basically entails after that big volume read. What about Q3 when we have a 20% plus SPY or NASDAQ? Well, in this case, we've got the NASDAQ results. And you can see here the Q3 tends to be a bit weak, followed by a pretty strong Q4. So for bulls, do you lose control? Do you say it's all over? Probably not, based on the facts and the stats. In pre-election years, this is the weakness period, though, if it's going to come. Now, I all promised you that I would have a look at gold because I had a suspicion that larger traders entered into gold positions. Unfortunately, the CPI number and the fact that we get these notes as of Tuesday didn't really show it through. But I think the price action still suggests that maybe drops in gold may be met by bull demand. We'll talk about that later in today's video. But you can see here there was a little uptick, which we reported on about 2 weeks ago. And that little uptick can get into a lot bigger uptick. What I'm watching for is this type of thing. I want to see a huge uptick in gold buying. And I suspect that might be just a week around the corner. So we'll update you. Make sure to subscribe if you're interested in following along, especially for gold. The precious metal is coming in, I think, pretty strong over the next month. Let's talk about options now. So what's going on in the wonderful world of options? Well, a lot of unusually large activity. Earnings season kicked off. Friday was a big trade day. And take a look at this. Everything was trading relative to 90-day volume average above 2.77 on Nvidia. That's a big deal. Then we had, of course, JP Morgan making it into the list thanks to earnings. And then we have also some other ones that we've been following on recently. Zoom, PayPal, all these types of things are starting to appear pretty much almost in the daily on these charts. And of course, the usual favorites, including things like Microsoft, Amazon, etc. But so many unusual volumes. Healthcare also got a bit of a special kind of update. But take a look at this. 47 versus a normal 39 read, 60% calls. Another very strong read on the overall options here. Let's have a look at unusual activity. Was there anything? I think there was, and it's more of the same as we've seen over the last 2 weeks. A couple of longer date puts being entered into in the markets below current prices. SPY, IWM, we've seen it on the Qs as well. These are for September, and we've had a lot of September and even some 2024 reads coming through. Let's now take a look at rotation in the markets, and it's still been all about gold in recent days. GDX is really behind where the market should be at this stage. So will gold continue its rally? We'll find out very soon. We've got some good technicals coming up on that in today's show. What about defensives? Did we see them start to spike up? Well, the last 5 days has been lackluster, to say the least, for these defensives. But I'll tell you what, on Friday, we did see them starting to poke their little heads up. Technology was down or down only a little bit in the end, but it was down. And then we had semis down the bottom there, along with energy really getting smashed around. But at the same time, healthcare was leading the charge and staples were second best. Now, healthcare had some unusual volume on it. Quite large trades coming through healthcare. We might look at that early on next week if we see it continue to back it in, because yes, it's been a sector that's done okay recently. So just before we jump into the charts and we take a look at all of the key hottest levels that you need to be watching this week, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now let's have a look at the platform, because you need two things coming into this earnings season. Number one is going to be news feeds, whether it's information about your favorite stock, which is in the feed if you select it from your watch list, or the ability to see news from some extra paid services such as Reuters. You can do so inside of the Tiger Brokers platform. But really, it's more about also having a calendar where you can select the types of stocks you want to look at, and then, of course, the way that you want to see them. As we know, there is a lot of information coming out over the next 3 weeks in particular, and you want to have that at your fingertips, which you can do so within Tiger Brokers by basically breaking it down. One of my favorite features is being able to select your watch list or positions that you're in, and then making sure that you're very well aware when the earnings season is coming up. If you don't know and something moves big, it can cost you big time. So check it out, and links in the description down below if you're interested in the platform. And more importantly, there's a bunch of special offers there for members of the community. Speaking of a sector that's done okay recently as well, it has been hyper stonks, or hyper stocks in general. I feel like it's 2021, so we might as well call it stonks again, as they've been running up, and ARK is kind of the proxy for this. Now, we reported in the last video that we saw a huge transaction go through. Could it be that that was a sell? We've now had 1 day of sell-off after seeing big transaction. If we start to get a bit more of a turn, well, we'll know what that big trade was, and we can maybe position accordingly based on our technical analysis. We also got some unusual trade recently on Tesla. Large trades, large trades. Will it continue to buy the rumor and then maybe be a sell the fact getting to 300? I think 300 could be a definite buy the rumor, sell the fact. The trend is still up. No new high put in terms of actual close. However, we did meet up to there. And we know that if we do sell off and then we just hover and then we get a gap down, this will be one hell of an island reversal. So on the moment, at least with Tesla at this stage, it's still bullish. That was a decent weekly close. You can see it here. And 300 is on the horizon. 300, though, is a very good, strong technical resistance. Let's have a look at some of the trades going through recently. Now, if you believe this is accumulation and you're a bull, you would be incredibly happy. But it is not just insignificant. Huge amounts of trades, some of the biggest we've seen in over a year, have all gone through between the price of around $260 and $280 for Tesla. So because we know this, we can start to figure out whether the technical analysis is going to agree with us either way. Get 300, get some massive reads up there, probably some profit taking from that accumulation. If we see sell-off here, Well, we know that that's the big guys dumping positions over the last literally 2 to 3 weeks. Let's move over to yields. Did they improve? Yes, they did. And as we know, the markets are relatively sensitive to yields again, especially if we get new highs. Always set an alert at a new high. The thing that the markets hate more than anything else is the fear of the unknown. And regardless of what we think about inflation, if US 2-year yields do spike to new highs, I would expect that to be a catalyst for markets to sell off. However, this caused just really one day up. Does this mark anything in particular? Not really at this point. US 2-year, US 3-month, certainly worthwhile having on the charts. Let's take a look at GDX here with gold, and we saw a new high being reached, which is a big deal. I think that kind of solidifies that pullbacks would ideally be met by bull demand at this point. And I expect a little bit of weakness through GDX or gold in general, as that huge rally needs to have some inefficiencies kind of filled ideally as it comes back down. As we go through Magma, was there much weakness in the big strength? Not really. Microsoft, Apple, Google, Meta, and Amazon still very strong for the week, putting in 3 massive days and then one kind of potential blow off. Now, a lot of people are going to argue in the chat that this is the type of thing that you see near the end of a trend. Basically unruly, unexpected, and potentially extremely dangerous style moves that are gaps on gaps on gaps and unusual. And I would agree with you, that is the type of thing we see. However, predicting that is very difficult. So, of course, we need to see more signs from things such as Magma of actual weakness. What about the RSP? Another day of down day for the equal weight S&P 500. Could this be the beginning of an island reversal? We have a gap up. We obviously have 3 days sitting up here. If we gap down, well, technically it would be. I don't usually chart the RSP like that too much, but of course we saw an island reversal down here that led on to a massive move. Here we have one that led on to just a bit of a day sell. So of course it's just a pattern. It's not necessarily a guarantee of a big move. High yield bonds were down. That's good for bears if they're looking for that. Came to this resistance kind of area and then sold off. So if we see high yield junk continue to weaken, that'll be strong. And as we know, that's most likely based on yields because, of course, treasuries also weakened off. We will do a bit of a special on treasuries moving forward, but I maintain 104 is an incredibly critical point. I kind of think like that's very possible for treasuries. If treasuries fail here and keep going down, then that means that the US 2 years broken out to a new high. But at this stage, treasuries found a beautiful looking base as of last week, and I still think that these are really good longer term. Now, the VVIX or the VIX in general, we've been watching this for a while. We know that almost all gaps, I believe, have filled on the VIX in the past, and we know that 12.12 is the final gap down here below. If that gets filled and markets keep rallying up, then it could be a catalyst. So something to watch on your charts as we move forward. Skew index didn't get crushed on Friday, didn't actually do anything. It went up slightly, so nothing to garner from this chart, but we'll continue to watch skew as much as possible. We also reported on the fact of TD13 on the Qs after getting basically a waterfall, which is a fairly rare pattern. We don't usually see these too often, and it can mark exhaustion in the markets. Again, gap ups, huge gap ups, 2 of them in a row. We've got probably the most amount of gaps I've ever seen on the right-hand side here that I've marked up. There's just so many of them. And it just doesn't seem to stop with the Q gap ups. But this is central bank liquidity. And as we can see, the market is so disconnected from that. And we found out that it was a lot of shadow liquidity that's probably been holding it, thanks to forcing, or the Fed basically not forcing banks to sell some of their bonds into the markets that were underwater due to yields. However, this is how big we are as a discrepancy, the biggest in over 3 years. Let's move over to the dollar index now, and it got demolished last week and put in a massive weekly close as well. Big, low weekly close here. Came into our box zone, found a little bit of buys. It's certainly overextended to the sell side. I do suspect that there is still more selling to come, though, for the dollar. So if it rallies, I think it's probably more shorts coming in. And I suspect that this thing's going into the 98s in terms of a handle, probably about 98.60, if not even a bit lower. But yeah, certainly underneath parity, US dollar very weak. And I'm looking to see it get some mean reversion on the 20 moving average, etc. Where are some of the bigger areas where you're seeing like a lot of drop and base and drop and base and drop and base style setups? So really somewhere around just above parity could be something that would rally the dollar next week, at least initially. Let's have a look at gold as a spot. And I do think that gold's in a big resistance zone. This is a heavily traded area. I think we've got a TD13 here exhaustion wise. So really, we're probably looking for gold to weaken, then ideally strengthen. And we've got some nice zones there coming up for gold. And I am kind of feeling a bit better about this because this was a fairly strong pull off based on two nice weak rejections on the weeklies here. And this is a great resistance. So this I can see bears sitting at. However, if we get past that in the future, yeah, gold could be actually going for a new high, new all-time high at that. So it's going to be very interesting. Dependent on yields, everything will go down to yields. Speaking of yields, we got big reads of oil, and we thought this would be short-lived, especially when we didn't see the US 2-year going through new highs. It didn't quite hit my most traded zone, but anything in here is obviously a bit of a resistance point. We talked about that. I don't really like oil more than what this zone was. That's really all for me. I have a suspicion that oil will weaken now and to continue going down. The main catalysts were yields, which are not looking as strong anymore in terms of going up higher. Strong high yield usually means good oil. And the other thing was OPEC, and that's probably fallen off now. So we saw the same thing here, but I'll tell you a little bit more why I think it could be. We get an island reversal here on the Friday open for energy. And the day before that, we got a monster sell as well. So we actually had huge sell-offs that were occurring near the close, similar to the SPY, dark pool activity, something we were watching, something that, of course, we've been on top of here on this channel. If you're interested in that type of stuff, definitely subscribe. We'll be covering a lot more dark pool activity moving forward. PayPal, one of our favorites, almost hit TP1. Didn't quite get there. We seem to be getting a lot of these, not quite getting to the perfect area. And you can see it just sold off that zone. This is our downward trend line. This is a beautiful supply. I expect some issues for PayPal here. It's been a pretty good run on it. A lot of people are now calling it as a breakout. Look, I think it's very cheap still in comparison. But as you know, most of this was really based on just huge amounts of options activity and higher than average volumes. And so far, so good. Yeah, quite a nice move on PayPal. And it's the same kind of thing for Zoom. It came up to the first kind of profity target area. We're not at the second one. There's a lot more run it could have, but all hyper stocks specifically based on ARK, I'd be a little careful of if we don't see a really nice pickup early next week in just general markets. The ASX 200's been on a run for all of the Australians. We'll go over to indices now. We'll cover the US stocks in just a moment, US stock indices. We saw that tweezer down the bottom. It led to a massive rally. The stock market in the US will ultimately be the deciding factor for the Oz, but I'll call myself neutral bullish at this point for this market, at least initially, because the problem is that this was so close to what we'd targeted, and then we saw the tweezer and then that reversed. So we're basically stuck in a range, and that's why I'd call it neutral at this point. And bullish just because technically, if you're always bullish on markets, you tend to do better than being a bear all the time. Speaking of bears, though, the German 40, this one actually did exactly what we talked about, which was it took the low, it rallied back up, perfect, and then we started to see a sell. Now, for anyone that's done, our day trading masterclass course or anything like that, it's a very replicatable trade, waiting for the right patient level. And of course, if you'd entered into this, you should have been broken even as of the close. Very nice entry. Already up 1.4 to 1 as a ratio, I think, but I'd expect a little bit more from it. Will it continue to sell off? Ideally, yes. It pushed everybody to the very brink. And of course, this is coming off this idea that this is in a Wyckoff distribution and that it took the low and it's rallied back up. Generally speaking, you'd hope it rallies into here. Anything like this is always required that you wait for the patience. That's why I say patience, react, don't predict. It's all about replication. And that's really trading in a nutshell. It's not that any of us really predict markets better than anybody else, because we probably don't. However, when we see edge and when we believe we've done enough amount of confluence techniques put together, that's when we want to be pulling the trigger. And of course, it doesn't really matter what market it is, as long as it's very replicatable and it's something where you've got good sharp ratio as well. Let's move over to the US 30, and it continues to be stuck in the middle of nowhere supply zone. I don't know what to say about the Dow at the moment. It's just stuck here, so it's doing absolutely nothing. The NASDAQ moved through our little resistance here. I remember I said that we hit the resistance early on the NASDAQ, and it went up, and it kind of got a little bit crazy bullish. And then by the end of the day, it had sold off, creating a shooting star or pin bar, Could this be the beginning of a turnaround? This was a very aggressive 1, 2, 3 with extended larger candles each day, subsequent day. That often shows an exhaustion style move at the end to absolutely destroy all of the bears and take out all their stop losses. Interesting point, interesting zone. S&P is the same thing. I said 45.30 to 45.40 was my area, and it hit like 45.27.57 or something. I think that's where it hit on the day. It was very, very close. The futures might have even been like 0.2 points off or something on some of the futures. But look at these gaps. They're everywhere. It's a gap fest. And it's been a beautiful run. And if you're a bull, absolutely, it's been damn impressive. But is this the turn point? Well, really, it kind of almost has to be if you're a bear. There's not many other great catalysts that we know of at this stage towards bearishness. We're at the right kind of period, the next 1 to 2, 3 weeks, that kind of thing, where we've got all of the other signals kind of pointing towards it. But realistically, it's just more about, do we actually start to see a proper turn event? All we've got right now is futures action, and we did have a minuscule turn. There were minuscule turns up here at 45.30 that a few members of our community took. That's obviously scalping and day trading, but I don't blame them for getting into those areas. And then we see a small turn here underneath that demand. Is it enough for a swing trader? No. Is it enough for anybody else? Pretty much no. Did we hit the level that we talked about? Well, yes, but that only means we hit a level. So you can see here 45.29 must be really close. Anyway, so in semantics, 45.29.8. There you go. So it was really close. Let's go over to the weekly closures and have a bit of an understanding here of what happened. Of course, we do have shooting star or pin bar rejection on the daily. We hit into some pretty big levels. We know that this was the critical zone back in April, March of the previous years, and we've kind of tapped into that area. So as we tap into this zone, this is where we expect to find ourselves ahead of these types of things such as earnings. Ultimately, this is going to be driven by earnings and probably nothing else. So let's now take a look for the news for the week ahead. And you'll notice it's a lot of monetary policy from other central banks. We've got Empire State Manufacturing Index, 8:30 a.m. Monday, 17th of July. We've got a bunch of CAD news coming out. And then we have retail sales for the US, which is at 8:30 a.m. New York time. We keep scrolling through though, and we get unemployment claims. That's not really going to be too important. And that's the main type of stuff. It's all about earnings this week. Make sure to get your calendar. And at that point as well, check out the links in the description down below if you're interested in the sponsor of today's video, which is Tiger Brokers. Subscribe, guys, if you enjoyed today's video. Comment, and of course, have a great weekend. Thank you so much for watching. We'll see you in the next one. Bye for now.